54,600. Here we go. And retained earning account is debited with expenses and dividend 600. So this 18,400 is basically ending balance of retained earning, which will go to retained earning account in the balance sheet. All right, guys, any question? Oliver, Faik, 10,
No question.
Moon, Momo, Subhan,
No, sir.
Jan,
No, sir.
Paulo, Marco, Miria, Mirko. Okay, now this we already studied about the liquidity. Liquidity mean ability to convert into cash. So when you are writing down the balance sheet, first write down the liquid asset, the liquid asset. So liquid assets are current assets, and the most liquid asset among them cash. And after that, account receivable. The third category is inventory, and then long-term assets. You write down. Right? Similarly, liabilities are also presented in order of liquidity. This we already have discussed, so I'm just going to go through a little bit fast here. So current liabilities, current assets are liquid assets, so must be returned before the long-term assets. Similarly, current liabilities are liquid liabilities, must be written before long-term liability. And under the current assets, what is the most liquid asset? Cash, and then account receivable, and then inventory, and then prepaid. If we have marketable securities, then cash, marketable securities, and then account receivable, and then inventory, and then prepaid expenses. And then you write down fixture, plant, machinery, whatsoever. All right. Similarly, current liabilities, most liquid are accounts payable, notes payable. Simple. All the payables, they are liquid one. And long-term liability, like bonds, bank loans, long-term notes payable. Okay. So just read it one by one. So current assets definition is whose life is less than or equal to 12 months or within the operating cycle. If operating cycle is more than 12 months, but normally 99.9% the performance year or fiscal year is going to be 12 months. So life is less than operating cycle, fiscal year, or accounting year, or less than 12 months. Long-term assets, land, building, furniture, fixture, equipment, and long-term investments as well, like intangible assets, goodwill, patents, right? Trademarks, this kind of stuff. Current liabilities, also whose life is less than or equal to 1 month, 1 year, 12 months. Accounts payable, notes payable, salary payable, unearned revenue, right? Interest payable, income tax payable. These are our current portion of long-term debt. That how much from long-term debt this year we are going to pay. And long-term liability, all the liabilities that are not current liability or whose life is greater than 12 months or 1 year. Right? Many notes payment are long terms, but it will be mentioning that the position of the long-term note is long-term or short-term. Question will mention that. Okay. Now here we go. So how you present the balance sheet? There are two formats of balance sheet: report format, account formats. For income statement, there are single step and there is multi-step. All right. First, let's look at the balance sheet report format. Report format, you write first down the assets, current assets, all the current assets. Then you write down total current assets with one line. And then you write down the long-term assets, right? And then you add current plus all the long-term. All right. You find out the total assets. And when you find out the total assets, you make double line here, which means there is nothing going to be added in these total assets. And then you write liabilities and Shareholder equity, first you start from current liability, total current liability. You write one line here. And then long-term liabilities, you write down the long-term liabilities and add to find out all the long-term liabilities, again one line here. So it means below the one line, everything going to be added here. If you do not make two lines here, why? Because it is still continuing here. So let me just remove this. So our common stock is 1 because it's in millions, okay? In millions. So it's 1 million. Common stock, shareholder equity, common stock, paid-in capital, retained earning, other comprehensive income, and you add it, total shareholder equity. All right. So this is non-controlling interest. We are not debating about that because this is more of the advanced financial accounting. So I'm not going to be discussing here. Just remember that if you control other business for their decision making, then technically that is your company as well, because you influence their management as well. So you also mention a non-controlling interest here as well. Okay. So total equity is the addition of all these: common stock, paid-in capital, retained earning, accumulated income, and then total liability and shareholder equity means total liability plus shareholder equity, which means these single lines must be added. So it is a double line here. So remember, total assets is equal to total liabilities plus owner's equity for 2011 and 2012 as well. All right. So this is called report format. What is the account format? If you write it down in equation format. So assets on the left hand side, liabilities and owner's equity on the right hand side. So all the assets, you start from current assets, right? And then according to liquidity, 1, 2, 3, 4, 5, 6. These are the total assets. And then liabilities, again from liquidity, 1, 2, 3, 4. First current liabilities and then long-term liabilities. We don't have long-term liability here, so we just add it all. So again, one line here. Total shareholder equity, one line here. When you add these one lines, it becomes two lines here, which means this is total liability and shareholder equity. Two lines here, total assets. So total assets must be equal to liabilities plus owner equity. So whichever makes you easy to make or make you understand easily, you follow that pattern or that format for balance sheet. Okay, any question? Oliver, Marco, Mirko, Moon?
No.
Good.
No, sir.
And let's talk about the income statement. So single step income, sorry about that. Single statement single format income statement is revenue minus all expenses. You have net income. All right. So revenue, under revenue category, you write down the revenue here. Under expense category, you write down all the expenses, you add them, you write down here. So all these 1800 plus 1000 plus 500 plus 400 plus 300 is equal to 4000. You write it down here. And then less taxes, you have the net income. But in multi-step, you follow this pattern. Sales or revenue minus cost of goods sold is equal to gross profit minus all admin and selling expenses. You have operating income. And from operating income, you less interest, you less taxes, you find out net income. So here, all the revenue minus cost of goods sold, you have gross profit. From gross profit, all the administrative expenses, selling expenses here. Depreciation, general admin, selling expenses, all the marketing expenses whatsoever, right? All the expenses are here, which is operation related expenses. And then gain of sale of properties, all the other stuff, you write it down here. We have operating income, because this one we study in advanced financial accounting, so I'm not going to repeating that one. Simple. Operating income, and from operating income you deduct interest and taxes, you find out net income. So normally in corporation, multi-step format is going to be followed, and single step is not followed, because in single step we have only one revenue measurement, that is net income. But here in multi-step you have three profit measurement or three margin measurement. One is gross profit, one is operating profit or operating income, and one is net income. So on this multi-step, you want to find out, okay, how much on the top of sales we have earned, and whether we can cover our all the admin and selling expenses. And after operating expense, it will tell you that whether our income is that much which can handle interest and taxes or not. And then you have the income tax. So you have three measure of profit. But normally organizations, they follow this multi-step format. So you can also memorize that simple: revenue minus cost of goods sold is the gross profit. From gross profit, all the admin and selling expense, you find out operating income. In finance, we also call this earning before interest and taxes, EBIT. And from EBIT, you deduct interest and taxes, you have net income. All right, everyone, understand? If you understand all the stuff, so we have successfully ended our chapter 3. And there's going to be assignment 3. Remember, the deadline is before the class. And please make sure you rename your file and make your file as a Word file. And I told you why, because I'm using Microsoft Surface, and Surface Pen is very handy on Microsoft products. So write your name, your student ID, accounting, assignment, and assignment number. Okay? It must be handwritten. Again, I should not repeat the philosophy behind handwritten. So you can use e-pen as well. I don't mind. So I'm going to be uploading all the material and all the reading material and assignments and these PPTs on our both Blackboard and WeChat. Okay? So if no more questions, then we will see you next time. Until then, take care. Bye-bye.
Thank you.
Thank you,
Thank you,
sir.
sir. Bye-bye.
Bye-bye.
Thank you.
Okay. Bye-bye.